Welcome to the Virtual CPA Success Show, where we're 100% focused on helping service-based businesses achieve success. Are you a business owner interested in learning how to scale your business? Has your business reached over $1 million in annual revenue? Then this podcast is for you.
Hello, everybody, and welcome. Today, we are going to hit on a really topic that's near and dear to Jody. Jody and I were just kind of talking before the show, and this is a topic that Summit was started on. And it's something that when we talk with clients and we work with people, it's very important that we try to get some kind of recurring revenue stream. And so we're going to talk a little bit about what are possible recurring revenue streams for digital agencies, why it's so important, and how it can help you run your business better in a lot of different ways. You know, it helps with forecasting, it helps with cash flow, and it helps with a lot of things. So those are the topics we're going to dig into here. And so, Jody, let's start with you talking a little bit about how Summit earns recurring revenue and why we started our firm that way.
Yeah, no worries. Yeah, it's kind of an embarrassing topic to even start with because the way that it was founded is that when we started the accounting firm back in 2002, we really didn't have any money. I had very little money in my name, and it was one of those things that I could not afford to have an accounts receivable. And so it was we approached the bank for a line of credit, didn't qualify for that because we were brand new and everything. And so it was like, well, how are we going to do this? And so initially we started billing by the hour and sending it out. But what happened was it just kept accumulating where people were paying late for all kinds of reasons. Being new to being in the business, we always wanted to give that client the second, the benefit of the doubt, or we didn't want to worry the client at all by, sending them an invoice or making a call because we didn't want to lose that client. So there was a lot of things going against us at the very beginning that I think really everybody probably in this podcast has had at some point there. And so we had to come up with a way that how can we do this and continue on, because I just couldn't afford it. And so I thought, you know what, let's try reoccurring revenue. No one in the accounting industry is doing it. Why can't we do it? Why can't we do it and there's a lot of reasons why you can't do it, because we were billing hourly at that time. For the first couple of years that we were doing things, we were billing hourly. It was kind of tough. We didn't know how to do recurring revenue without that. So we thought, well, let's do flat fee. And so flat fee was the way that we started it all off on. We thought, well, hey, here's what a tax return costs. Here's what visiting, once a month, maybe to their office and going through some financials. Here's what that's going to cost. And we thought, you know what, let's do this monthly. And so we set up a reoccurring monthly model to where we hit their account every single month. And we always did it after we had done the job. So it was January, for January, we would actually bill them out on February, and we collect our money, February 1st type of a thing. And that went really well until a client decided that they didn't want to pay us. And so they discontinued the recurring revenue. We were at an entire month's worth of revenues. We're like, oh, that's not going to work. And so we immediately changed our model for all new clients we brought in, and kind of over time changed the model for the existing clients that we were going to do it prior to the month. And then we got a little pushback because it was a month's worth of work. And the clients are like, oh, what, they just got that little pushback thing. So we thought, you know what, let's not get any pushback. Let's just bill them every week. And so we started doing a reoccurring weekly revenue, or weekly, where we just hit their account every single week. And you know what? We got zero pushback. Nobody pushed back at all because they knew they could always discontinue the service anytime they wanted. They're only there for a week and obligated for really a week at a time. And it was really great. It took our receivables down from, basically nothing at all, and allowed us to actually reinvest that money back into the business and really build the business we are today. And so we've done it ever since. Any new client that we ever bring on is, they're reoccurring. We zap their account every single Monday through ACH. We don't send out invoices. We don't waste that valuable time. We don't have an admin doing that for us. It's just an automatic. And the clients love it, because it's less burden on them. And then we love it because, again, it's less burden on us. So it worked out really well. But it all came back from kind of an embarrassing time where we just didn't have the money when we started our new business. We had to figure out a way to make it work.
Yeah, and I think the from a project manager standpoint, I've told this story a number of times, but my background is in public accounting, where I was an audit manager, and I remember sitting in audit rooms and having this really important conversation that I wanted to talk about with the client. The rules were changing, or they did something wrong, and before I could have that conversation, I'd have to say, "Oh, by the way, you haven't paid your outstanding invoice yet," and you lose your credibility with the client. You're trying to have these really serious conversations with them, but all I'm worried about is when they're going to pay me next. So from a project manager standpoint, working at Summit has been really easy. I've never had to have those conversations with my clients because I don't even know. I mean, all I know is that their account gets withdrawn every week, and I never have to think twice about it. So that's one of the real advantages of it from the way we do it is that it lets your project managers not have to do those collection calls. And I've had the same thing with working with my clients. A lot of times my clients we'll be the first line of defense. We'll call and we'll say, "Hey, you haven't paid your bill." But oftentimes when the accounting department calls, they don't care. It's that PM, the person who's actually a stakeholder, that they'll listen to. And those are pretty difficult conversations to have from a PM standpoint. So I think that's my personal experience working with this type of model. It really helps me as a PM.
Yeah, and to kind of piggyback off of the experience in public accounting, prior to working at Summit, I worked for a couple large accounting firms, and one of my roles was basically onboarding new clients. And so it was kind of a cool role. Got a chance to meet the client right away. Worked with them for about a month, and basically they contacted me and talked to me pretty much on a regular basis. And then all of a sudden the phone calls dried up. Didn't think anything of it because we were onboarding so many new clients at these large accounting firms. And then at the end of the year, we got their tax stuff, and it was a disaster. It was unreal. You ask a few of them. It went on for a little bit. Then you ask a few of them, why didn't you call me? I could have helped you out with this. We could have saved a lot of struggling throughout. And they're like, well, we got the first bill and we didn't want to call again. So they knew they were on the clock. So it was one of those things. It's like, well, that's tough. And when you think about it, you're right. The first thing you do when you talk to a lawyer is what? Hey, I got a real quick question for you, right? Or they preface that. You always do that. We do that as human beings. Hey, we got a quick question, and you're hoping that they don't send the bill afterwards. Or if they do send the bill, then it's like, well, geez, I probably could have Googled it and found that out afterwards. After the hindsight type of thing. When in reality, you wouldn't have known what to look for to begin with. So it was one of those things that recurring revenue really, really, the subscription-based type model really solved a lot of those issues and allowed our clients to actually freely contact us all the time. And I can imagine the wonders it would do in the digital marketing world, in the creative agency world, if the shareholders knew that, hey, we can contact you guys all the time with questions, concerns, and because of that, we can get a great product, a great relationship. And heck, in my time with Summit, since 2002, I don't think we've had any clients abuse it. I really don't. What's your take on that, Jay?
Yeah, no, I definitely agree. And I think when I first was interviewing with Summit, that's something we talked about. And that was one of my big concerns, is not even them abusing it, but more of how many clients are going to walk away from you because of this model? How many clients turn you down because they're not willing to have their account drawn on each month or each week? And I think that was one of my big concerns. And I've been involved in, I don't know, a lot of sales calls in my time at Summit, and it's never come up. Hasn't come up once in any of those sales calls. And that this is a concern. We don't want to work with you because we don't want our account drawn each week. And so it's really interesting that has never come up, and it's hardly ever abused. And like I said, it takes a lot of those conversations out of the meetings you have with your clients, which is key. You want to have very important, valuable meetings with your clients. And again, the fact that it doesn't bother them and they say, "Oh yeah, that's fine. That's what you guys do. And that's how you work. We'll make it work for us." So
yeah, it was kind of funny because, like I always say, this accountants hate change. That's just a fundamental thing, and they're afraid of taking risks. And the biggest risk that we took at that time was potentially not getting clients when we really, 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 really needed clients. We weren't flourishing. We didn't have tons of money, tons of cash. And the reason why we went to it in the first place is because we didn't have tons of cash. So it was a huge, huge risk at the time, and it paid off. The risk was all us. The worries were really all us because, like Jamie mentioned, we didn't go back and necessarily say, hey, everybody, here's how we got to do it. Every new client we picked up, we did it that way. And then we introduced it to certain clients and they pushed back a little bit. We're like, fine, you can continue to invoice them out. Eventually, those clients did the exact same thing. They eventually went with a weekly fee after a while. But the biggest fear was the fear that we had internally. It had really nothing to do with the clients, because the way that you posture with clients is really simple. Like Jamie said, this is how we do business. And we get no pushback at all. We close about 30% of our opportunities, which is a very great closing ratio. And so it never comes down to that. That's never even been brought up as an issue that, since we started introducing it. It's just like, that's just how we do it. They didn't know any different and they didn't care. They're getting as long as they know up front. The worst case thing to do would be to surprise them after the fact, because they hate that even worse, right? They hate getting the bill after the fact and it's like double what they thought, or it has all these extra things in there you forgot to tell them, or just didn't tell them because you're worried about the pushback. It avoids all of that completely. Which is great. So, we're never arguing about bills. We're never talking about the bill. We're never explaining the bill. We're never explaining why we had two people at the meeting and billed them for both of them. Why should we just have one at the meeting? All that kind of stuff is never in the discussion. It's always about their business and how can we improve their business. And that's the key part of it. And that's what marketing firms really need to learn how to take advantage. And to that point, Jamie, what are some different ways that marketing firms can take advantage of the reoccurring revenue? Maybe not the exact same way that we're taking advantage of as an accounting firm, but as a marketing firm, what are some of the ways that you've thought of?
I think there's two that I see quite a bit that really are probably the easiest to explain, and then I'll talk about a third that's kind of a little bit more creative. But the two that we see the most often is maintenance. So anytime you're in a maintenance type agreement where it's a long-term agreement, you're doing some kind of maintenance and upkeep on a product that's out there for the client, that type of thing should be invoiced weekly. It should be collected weekly, and it becomes predictable that way. It doesn't matter, again, some weeks you're going to put 20 hours onto it, some weeks you're going to put 5 hours into it, but as long as you are planning for it in the long term of, okay, how long should this take per month, you're going to end up coming out ahead on that. And so that's a big thing, is making sure that you're planning for how many hours you think it's going to take, and then just coming up with a flat fee and billing that every week or every month or whatever time you think makes the most sense. So that's the easy way. And then the other easy way is a lot of times like outsourced work. A lot of times, you'll have a couple extra employees on hand that you just keep on hand just to go and work in a company's IT department. And that type of thing is obviously another way to do recurring revenue. We're going to give you 2 people. It's going to cost you $10,000 a week or whatever that amount is. And that's how much we're going to invoice you. And then if you go down to 1, we'll cut that in half. But that is 2 very common ways that we see in this industry.
And I think, Jamie, to add to that, I think the 2 key things you mentioned there was that, both of them, you knew the fee in advance. You knew how much you were going to charge them in advance. Because what we don't want to happen is we don't want to get bogged down in the administrative side, where we've got to then automatically count hours. We got to justify the hours. We got to send them an invoice, or we then hit them with an account. Or we don't want there to be an administrative part to this. We want to take that out of it, because the key is we're trying to make life simpler for everyone. Us, for them, for clients, for the whole works. And with that, we don't want to have to hire 2 administrative people just to be able to handle this new billing process, right? So I think you're 100% right. And I think the 2 big keys to that was that you need to know the fee in advance. And if you don't know the fee in advance, Jamie, what's some ideas on that one?
Yeah. So before I answer that question, one thing I want to add to that is predictability is key in business. And that's one of the advantages of doing this. And so predictability is key for me as someone who's collecting cash. And so it's key that I know how much I'm going to collect each week, but also it's key for your customers. If they know they're paying $2,000 a week, it's a lot easier for them to stomach that. And it's a lot easier in negotiations, because they don't think that, okay, you're going to start with $2,000, but then by the end, I'm going to be paying $5,000 a week. We've all gotten those kind of agreements in our personal lives, where you start, Netflix is only $9 a month, and then 3 years from now it's $24 a month, and you're still paying for it, and you just kind of forget about it. And so I think that's the thing, is predictability is key there, and that's why you want to do that up front and say, hey, this is our agreement for this year. This is how much we're going to charge, and never stray from it unless there's a scope change or something like that. But that is key. So, sorry, Jody, I went off on that tangent. What was your question? Getting back to that.
Oh, how do you deal with fixed fee in the event that it's not a fixed fee? So how would you do the reoccurring revenue without a fixed fee? Yeah,
so this is, again, something that we've worked with our clients on as well, because we really strongly believe that the recurring revenue is key, and that getting the predictability on both sides is important. So if you had a non-fixed fee arrangement where you wanted to go back and evaluate it at a period of time, so what you could do is you could invoice or charge $1,000 a week for the 4 weeks, and then at the end of the month, go back and look at the overs and unders and say, okay, this month month, actually, we worked over, so we're going to bill you an additional $300, or we worked under, so we're going to credit the next invoice, so it's only $700. And so you can kind of determine what that time period is and just evaluate it at that time. And it can be a month, it could be 6 months, it could be 6 weeks, whatever time period you determine that you're going to do that. But the key is you send that out as a separate invoice. You send your weekly $1,000 invoice, you keep doing that, then occasionally, whatever that time period you've decided it is, you send out that extra invoice that helps get that amount trued up for the non-fixed fee types.
Mm-hmm. Yeah, and I would say the best time to do that, to do all this is actually during the negotiation phase, because you've got a lot of leverage that maybe they're trying to beat you up on price, or maybe they're trying to beat you up on something that's a little more trickier. Well, this is the lever or the leverage that you can pull. We can do this, but here's how we need to handle this. We need to handle this where we're getting ACH oh, you guys don't do ACH? What can you do as opposed to ACH? Do you do wires? How does this work out? So that you can actually get all this figured out while you're in the negotiation phase, especially for the big contractors or the enterprise contractors, because some of them have the capability of doing it, others don't. And so you need to know that right away so that you can negotiate the best deal and the best thing. Maybe it's like Jamie was saying, with on a sprint basis where you just bill every 2 weeks, or and then send the documentation later. It could be whatever, but it's important to negotiate that right up front.
And like I said earlier, the predictability, the customers usually do appreciate that. It makes it easier to budget. It makes it easier to forecast. They know how much they're charging you, and then they have one invoice a month or one invoice every 2 months or a quarter that they can actually look into and have discussions with. And it's fine to have those discussions. Those discussions are good. You can talk about the scope creep. You can talk about what happened. You can make the relationship even stronger in those discussions. But it's a lot easier when you're having it occasionally instead of every time an invoice goes out, because they don't have to look over each invoice and fine tooth, mark off the hours and be like, oh yeah, they were here that day. They don't have to worry about that until the very end, when you can actually have those conversations at a higher level, which is really important.
Mm-hmm. I think now it's time to probably a real quick break, Jamie. What's the email address that if anyone has any questions or wants to be part of the podcast, how would they get a hold of us?
Yeah, so definitely. We have an email address that you can email us. And again, the purpose of this email is if you have any questions that you want to talk to us about, or you want us to talk about in this podcast, we are always looking for new topics. If you want to join the podcast, we're always looking for guests. So you can email thecfo@summitcpa.net. Again, thecfo@summitcpa.net. We're always looking forward for our listeners reaching out to us and making this show better. So we're looking forward to hearing from you.
Yeah, sounds great, Jamie. Thanks.
Yeah. So again, we talked about a couple advantages of recurring revenue, Jody. I wonder if there's anything else that we need to add to that. So the two we added so far is obviously the project managers. It makes it easier on your team to manage. The second is obviously the forecasting and the predictability. Any other advantages there to doing recurring revenue?
Well, the huge advantage is cash flow. I mean, that's basically the most obvious advantage in my opinion, because now you've taken your cash flow cycle from maybe 60 days or 45 days, and you brought it down. And especially if the majority of your business is recurring revenue, it brings it down even more. Like, for instance, we're a $6 million accounting firm and we have 0 accounts receivable. Actually, we have negative accounts receivable because we get a lot of what we do in advance. So our cash flow is a lot better than somebody that's sitting out there that an accounting firm of a similar size may have $500,000 in accounts receivable. Man, well, let's put that money to work now, or take advantage of it now versus later. And so we find that the companies that have the highest or the lower risk are the companies with the higher percentage of, recurring revenue. If you can get a 50% or 60% recurring revenue, just imagine how easy your life is going forward. Instead of having to, hunt and peck for $100,000 of business a month or $1 million in business a month, depending upon your size. It's going to be 40% of that, $40,000, $400,000, depending upon what it is. It just makes everything that much easier to work with, and takes so much risk out of it to where you're not have to worry about, hey, am I going to get this next job, or I have to lay a bunch of people off? If you've got 60, 70% recurring revenue, or even 50%, the chances of that's a lot slimmer, because you're taking the risk out of the equation.
Yeah, and if you think back to our pipeline podcast that we did, we talked a lot about capacity and what's under contract. When you have a lot of recurring revenue, that gap is a lot smaller. you have a lot smaller gap between what your capacity is and what you have under contract, because you know at any time that, even if we have no long-term project work, I still have $200,000 a month coming in of recurring revenue, which just makes it a lot easier to feel good about your outlook and also manage your business. Okay, I can take a little bit more risk and charge a little bit more to this project because I have so much recurring revenue, and so it helps you run your business a lot better.
Yeah, and also kind of, when you get to that point in your life cycle that maybe you're the business development person, and you want to say, hey, I need to get somebody to take this position over because it's just wearing on me. I need to do something a little different. Well, if your recurring revenue is high, it's a lot easier to transition out of that position if you're not having to fill an entire book of business for your team, and the risk isn't as there, because the risk is you hand it over to the next person and they fail miserably. Well, now you're in a bad situation. Now you're in a situation where you've got to lay people off, you got to scrounge, maybe jump back in on a fire drill type situation. Whereas if the recurring revenue is high, it's not as big a deal to maybe lose a client or maybe not to get one client, because the margin, their gap, like Jamie's saying, is a lot lower there. So, recurring revenue does a lot and basically solves a lot of issues that you may be having right now. It makes the big rocks very small, which is the key there for sure.
So, Jody, one thing we've talked about a couple times in this podcast, and I think to a non-finance person, this might sound a little intimidating. Can you talk about the process of setting up an ACH? How complicated is it? And what goes into setting up an ACH with your clients so it just comes in automatically each week?
Yeah, it's a fairly simple process. But the key, though, is you have to have a bank that has that ability or have a vendor relationship. There's vendors out there that can actually set this up for you. The Bill.coms of the world, you might be able to work through them or, any other vendor for that matter. But with that, the banking relationship is the easiest. So as part of the engagement, when you send out the engagement letter to the SOW, everything gets signed, you always attach the recurring revenue form to it, giving authorization for you to take money out of their accounts. They'll input their banking information. If you can do it through an automatic means, that's great. That's even better than the old paper way. And you get that information set up, and then it automatically gets feed right into the bank. So at that point, it's just a matter of getting the authorization, having them sign off on it. ACHs just automatically start coming on Mondays, and they have the capability or the ability, and you always want them to have the ability to terminate it. And that's the good part about it. So they've got control over it. You've got control over it, and there's no needs or worries. And again, we're only looking at the most. We're looking at a couple weeks or a week or a month, depending upon how often you want to set it up. We recommend weekly, but some people want to take the baby steps and do it monthly, and that's cool. I just think weekly is the better way of doing it. And with that, you've got the real easy method. It does not take long to set up recurring revenue. The key, though, is that when you do get that banking relationship, make sure that the recurring revenue set up where it's an automatic monthly pull, so that your firm administrator is not going in and having to do that manually, every month. That's really important. So the key is making everything as automatic as you possibly can. And like I said, there's software out there that can do that for you. I would definitely look at 2 or 3 different ones to get some ideas on what the pros and cons are, but that's one way. The other thing is that you can offer credit card payments as well. I don't endorse that method necessarily, but it may or may not get you a client, at least a smaller client. The problem there is you're always giving up a small fee to the credit card agency, whereas an ACH costs you maybe $1 a transaction. That fee may cost you 1% to 3% depending upon the credit card company. So you can have it set up in both different ways, basically through the same means. But again, try to keep it as electronic as possible to keep everything away. You don't want to house their banking information anywhere. That's going to be very important. As soon as that banking information is entered, it's real tempting to keep it in case something goes by. You can add it again. Now, making a phone call is a lot safer, especially if someone were to break into your system there, than calling them and explain to them how you had a security breach type of thing. So it's important that if you do the paper means or PDF, that gets shredded or destroyed after the payment's set up. If you're doing it electronically, which is what we recommend through a bank or a software where they've got that already dialed in, then that information is not housed in your system, and you can sleep at night, in the event that something does happen.
Yeah, no, I think the key there is, I mean, I think it sounds complicated, but overall, if you just called your bank or called your accountant and had them set it up, it wouldn't be a lot of work. And I think that's the key. And again, it's definitely worth it. We talked about a lot of pros during this podcast. And I would say, it's one of my favorite things about working at Summit is that we have this model. And, I've been part of forecasting calls. I've been as a PM, and every direction I've seen this from, I've seen a lot of advantages. So I definitely think it's something worth implementing at your organization. So any final thoughts, Jody? We're getting close on time here. Any other final thoughts that we didn't touch upon?
No, I think so. I think, like I said, recurring revenue is what really saved our business from the very beginning. When we were very small, under $1 million in revenue. I call that very small for us, because we were with the idea of growing really big. And I know we couldn't have done it. We couldn't even get to the $500,000 mark without having the recurring revenue model set up. Just financially, it just wasn't something that we had a ton of cash. And so it really helped us out there, and it really helped us learn, the importance of it. It's amazing, how we have weekly meetings with clients that they always show up. And, they, like Jamie mentioned before, when there was always a bill that they were behind on, or if they felt that, oh, wow, I'm behind 3 months, I feel guilty about showing up, they quit showing up. And that's when we really needed to talk to them the most, is when they were having the difficulties. And so this took that completely out of the ballpark. They show up, it's an automatic. There's no issues with that, what Jamie was saying. It really solves a lot of the forecasting issues. It solves, a lot of the risk issues that we talked about. And it's very well accepted. I mean, it's not something that's not accepted anymore. All software companies do it. Why not have service companies do it? And that's what we set up a long time ago, over 15 years ago, and have been doing it successfully ever since.
Yeah, great. Well, I appreciate your time today, Jody. And again, we'll be back soon with another awesome topic. So talk to you soon.
Yep.
Enjoy this episode? Visit our website at summitcpa.net to get more tips and strategies for achieving virtual CPA success. We're here to be a resource in this ever-changing industry.